Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of August 3rd, 2015. Hello, I'm John Thomas with Prime Residential Mortgage here to give you an update. Well, last week was definitely a good week for Delaware mortgage rates. If you take a look at the bond chart on the screen, you can see that blue arrow up there. Mortgage bonds were able to finally make a recovery off of the 2015 year low for the bond. Rallied higher, you can see the green candles. And then big news last week, we broke above this layer of support, which was a triple top for trading pattern. That was a bad sign. If we didn't break above that, mortgage bonds would be turned lower like they had the last two times. Well, on Friday we broke above that. It was at 103.68. We closed on Friday at 103.84. It's a good sign. This ceiling of resistance can now act as support. So with that in mind, we're going to recommend floating your Delaware mortgage rate to start the week to see if mortgage bonds can rally from here. But be wary as we go in towards Friday. Friday's the jobs report. That could be a market mover. So as we get closer to Friday, we might recommend switching to locking. But start the week floating to see if you can get even lower interest rates as we start the week. Now in economic news, big report last week, gross domestic product, the first reading of the second quarter of 2015 came out much better than the first quarter, rebound higher from 0.6% in the first quarter to 2.3%. So that's great news. Now the rebound was seen from a rise in consumer spending by nearly 3% and an increase in U.S. exports overseas. So that was definitely good news there. And then other economic news, the price of oil continued to drop. On Friday, it closed, the price of a West Texas intermediate barrel of oil was $48.21. We're back below $50 a barrel. We should start seeing lower prices at the pump if oil continues to stay low. So that drop on Friday came after OPEC announced that they were not going to cut production. We've got a glut of oil and they're not cutting production, so that's going to keep the supply higher than demand. So we could see oil prices continue to fall from here. On that news, the stock market did sell off, move lower, because lower oil prices is not great news for mortgage bonds. For stocks. Great news for mortgage bonds. Now, then we saw weak initial jobless claims come out on Thursday. Claims came out at 267,000, below expectations at 272, but it's still an uptick of 12,000 from the previous week, which was 255. But remember, the previous week was a 42-year low, so still good solid report on unemployment claims there. And then the previous week, the 42-year low, was the sample week going to be used in the jobs report for July. It's going to be released this Friday. So we might have a very good jobs report. So getting closer to Friday, Wednesday, Thursday, we might be telling you to lock your mortgage rate ahead of the jobs report. We'll let you know, so stay tuned on that. And then in housing, the national rate of home ownership was at a 22-year low at only 63.7% of people owning homes at the end of the first quarter of 2005. That's compared to 69.2% at the peak in 2004. So it hasn't been 63.7 since 1993. Now the drop in home ownership can be attributed to low inventory, that's not enough houses for sale compared to the buyers, and the millennial generation delaying purchasing homes. So that has contributed. But the good news is, as millennials come back on the market, lots of opportunity to buy. That should increase the rate of home ownership. And then we saw the Shiller 20-City Home Price Index for May 2015. It was up 4.9% from May of 2014. So the year-over-year 4.9%, that's right in that 5% year-over-year gain we've been looking at. So it's definitely a good number for housing. Shows it's still stable. Home prices are still appreciating. Then we saw pending home sales for June 2015. It was down 1.8% from May. But again, May was the best level in 9 years. So still a good report if you look at the chart there. Pending home sales are still up 8.2% year-over-year. So that's still a good news for housing. Remember, pending home sales is the number of contracts on existing homes for sale. Then we saw the, if you look at the chart on the screen there, change in state home price index for the first quarter of 2015. Delaware had an increase of 4.3% in home price, which is 20% above the national average, which was only 1.06%. So we saw some great increases in the home price in Delaware again. Low inventories putting a good price pressure on home prices. So get out there and buy. Home prices will continue to climb in Delaware. That's what we're seeing from the numbers. And then USDA rural housing. If you've got a USDA loan, as of Friday the 31st, they were working on loans submitted on the 21st. So that's a 10-day delay. So please plan accordingly. You should not be doing any USDA contracts in less than 45 days because there's a 10-day lag on the end for them to review files. And remember, the guarantee fee on USDA loans is increasing from 2% to 2.75%. October 1st, so be prepared for that. And the local news, the next first-time homebuyer seminar is in Newark, Delaware on Saturday, August 29th from 10 a.m. to noon at the Christiana Hilton Hotel. You can register for that event by giving us a call in the office, 302-703-0727, or online, www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.